people, Sid here. I have something useful and exciting to share with you today, which I shall cover perhaps in the next 5 to 7 minutes. I will be briefing about two things. A. Some of the important fundamental factors which drive a stock price. B. Some of the common fundamental characteristics that 100-bagger stocks have exhibited in the Indian market. Time for the disclaimer. There you go on your screen. A number of factors influences the stock price, like technicals, unrelated macroeconomic developments, etc. But none more so than the fundamentals of the company. No stock can go up sustainably well for a long period of time and give you returns without strong fundamentals. Period. So what are these factors? What are these fundamentals? Let's first take a glimpse at the 100-bagger stocks between the year 1994 to 2014. Eicher Motors, HDFC Bank, Asian Paints, some top-notch companies in there. These 47 stocks on average took about 12 years to give 100x returns. So, what were some of the common attributes that made them click? A. Consistent high revenue and earnings growth rates year after year. B. All of these stocks, when they started blossoming, were either microcap, small cap or mid cap. In other words, it is ideal to pick companies in their growth phase and make huge returns. C. Quality of management. All of these companies met their corporate goals consistently. Hence, it's important to go through annual reports of companies and ascertain whether it met the corporate goals it aimed to achieve the previous year. 100-bagger stocks are virtually unicorn-like. They don't come by very often. But the market provides plenty of opportunities to double your money in a span of 1 or 2 years. There are over 3,500 stocks in the Indian market. Plenty, ain't it? What does one pick? Where does one start? The most crucial factor is a no-brainer: recent revenue and earnings growth and the medium-term growth prospects. Quite often, investors get lost in all the cute terms, jargons and valuations, when the first thing they should be paying attention to is the top line and bottom line growth. Pick stocks which continue to have leading revenue and earnings growth rates. It's quite simple to shortlist such companies. One can run a simple filter on Google Finance or Panarray and voila, you quickly end up with a score or two list of stocks. Once you shortlist the stocks, the next question you must ask yourself as an investor is, will they sustain? Will the earnings be good enough in the medium term period? And why bother with such questions? Well, the markets are very efficient, and for a stock to go up at time zero, the market almost always looks at what's going to happen to the company's performance, say 3 months or 6 months down from time zero. Let's take Maruti Suzuki for example. Their after-sales service was always good, their cars fuel efficient, what every Indian consumer wants, and over the past 3 years or so, the styling, build and ride quality, premium branding with Nexa stores has significantly improved. They have new models lined up for release too in the next 2 years. The auto market is alright. Disposable income and middle class population is slowly rising. Maruti's revenue and net profit growth rate has been higher than any automobile maker in India. It shows in the charts too. In the last 2.5 years, the stock has gone up over 225%. The market share has improved from about 38% to nearly 49% currently. Now you can ask yourself this: will Maruti sell more cars in the future? Will its stock price continue to soar in the long run? Most likely yes. Along with high revenue and net profit growth rates, one should also look for companies with high net profit margins, ROE, operating cash flows. In simple terms, high operating cash flows implies low credit sales. And generally speaking, low debt to fund the business is good, as it brings down the interest expenses. But the fundamentals I spoke about are not everything. Depending on the industry, other financial metrics need to be considered as well. Technicals, psychology of the market, macroeconomic trends, etc. are extremely important to buy and sell stocks at the right time. Quite often, the fundamentals of the company is great, and yet the stock consolidates for months, years sometimes. It could be because the market has already priced in the positives, or institutional demand is less. Therefore, technical factors are important too, in buying and selling stocks. To know more about technicals and other aspects about equity investing, subscribe to our YouTube channel and our mobile app, MarketSmith India.